Oil prices dropped further today, hitting their lowest since July. That's after Saudi Arabia made the deepest monthly price cuts for supply to Asia in 5 months. Let's do a three-point analysis of the outlook going forward on the oil prices. 1. Oil market stuck in stalled recovery. Well, if you see oil prices dropped more than $1 a barrel, that is on September 7th. Also, Brent crude was trading at $41.75 a barrel, its lowest since July 30th. The WTI crude level also slipped 2.3% to $38.86 a barrel, a level that was last seen on July 10th. Now, this was after the world's top oil exporter, Saudi Arabia, cut the October official selling price for Arab Light crude it sells to Asia by the biggest margin since May. Now, crude prices had plunged to historic lows as the pandemic's lockdowns crushed the demand to zero really. Now, they have pared losses since then, but have also remained stuck near $40 a barrel as well. Now, in the past 3 months, say June to August, Brent has actually been trading in the price range of $37 and $46 range. Now, WTI has also been trading in the range of $34 to $44 a barrel. Now, the world remained awash with crude and fuel supplies despite the OPEC plus supply cuts and the government's efforts to stimulate the global economy and also the oil demand, which is forcing refiners to rein in the output and producers to make deep price cuts yet again. Now, Reuters reports suggested that the International Energy Agency officials believe that piled up storage and unnecessary or uncertainty over China's oil demand are clouding the oil market's recovery. Second, demand uncertainty. When you talk about China, the world's biggest oil importer that has been supporting the prices with record purchases all along, it has slowed its intake in the month of August and increased the product's exports, according to the customs data given on September 7th. Now, the IEA also cut its 2020 oil demand forecast in its monthly report on August 13th, warning that reduced air travel would lower the global oil demand by 8.1 million barrels per day. Now, as per the IEA, there are so many uncertainties with regards to the Chinese economy and their relationship as well with the key industrialized countries, with the US and these days also with the Europe. Now, oil is right now also under pressure as US companies increase their drilling for new supply after the recent slight recovery that we have seen in the oil prices. 3. Where is the oil headed then? Well, if you see weak economic growth that's across the globe and a tardy labor market in the US is not a good mixture for the energy markets per se. Now, it is common for oil markets to really rally when the equity markets continue to rally as well. However, the green shoots of recovery will take much longer for the economies to be back on track. Also, if you see in that case, the demand side recovery for oil will also take a longer time to really recover. Now, experts say that investors have been liquidating their exposures in oil in the past few weeks, and as the global economic doldrums continue, the liquidations will also exacerbate, pushing the oil prices lower in the weeks ahead.